What's up guys and welcome back to Wall Street Millennial. If you're new to this channel, we cover everything related to stocks and investing. Today we're going to be looking at some of the greatest gains and losses on the Wallstreetbets forum over the past week so you can learn from other traders' experiences. Before we get into this week's fresh fails, let's revisit one fail from January 10th by user CaveRYPCA. This Wallstreetbets user made a lot of money on GameStop's recent run-up, making 100% gains on stock alone. After this huge gain, this Wallstreetbets user thought that they could supercharge the gains by using options YOLOs. After this, they put $60,000 into out-of-the-money calls on GameStop with a $30 strike price expiring on January 15th. As of January 10th, GameStop would have to double in less than a week for them to expire in the money. At this point, most commenters wrote them off as a casualty of war, with the OP saying that there would have to be a glitch in the matrix for this position to work out in the end. As it turns out, that is exactly what happened. Over the course of January 13th and 14th, with only 2 days until expiry, GameStop stock increased in price by more than 100%. As of about 1:30 Eastern Time on January 15th, GameStop was trading around $35 a share. Taking a look at those calls, they are now trading around $5.50 per contract. The original investment was 618 contracts for a cost basis of about $60,000 total. They are now worth $339,000. That's more than 5.5 times the original $60,000 investment. Many Wallstreetbets users have had impressive gains on GameStop in the past couple days. This has vindicated Wallstreetbets as a legitimate place for at least getting investment ideas, with possibly the power to single-handedly cause triple-digit gains in many small to medium-sized stocks. This turns into a self-fulfilling prophecy, with Wallstreetbets users spreading hype about the stock, and that hype causing massive run-ups that justify the hype. Congratulations on your amazing gains. Next we have user Amazon, who posted the results of a $50,000 weekly Tesla YOLO. He bought $50,000 worth of 1,000 strike calls expiring on January 15th, 2021. As we all know, Tesla stock has had an insane run-up this year, rising more than 700%, but this Wallstreetbets user's strike price of $1,000 is a little bit aggressive. On January 11th, things were looking pretty bleak for this user, as Tesla stock has not been rising as fast as he hoped it would. He shared a screenshot of his position showing an 81% or $40,000 mark-to-market loss. On that day, Tesla stock closed at $811, a full 23% away from the strike price of $1,000. Despite this gut-wrenching loss, fellow Wallstreetbets users in the comments section encouraged the OP to have diamond hands and hold the contract till expiry. It seems that he took their advice, as he came back the next day, January 12th, with an update on the position. On January 12th, it seemed like things might be starting to turn around for this user's position. Tesla increased 6% overnight to $862 per share. At this level, Tesla would only have to increase 16% over the next 3 days to expire in the money. This is a significant improvement over the previous day, and thus the OP's calls increased in value from $1.71 the previous day all the way up to $5.98. This favorable price movement decreased his loss of negative $40,000 down to negative $19,000. But despite this favorable development, his calls were still far out of the money and time was running out. On January 15th, Tesla stock started trading at $855 a share, meaning it would have to rise more than 17% by the end of the day to reach the strike price. Such a large one-day move to the upside is very unlikely, even for Tesla, so there is a slim chance of his option being worth anything on expiry. Assuming the OP followed through on his diamond hands and held till expiry, it looks like he is on his way to losing everything. Better luck next time. Next up, we have Robinhood user Jedi Sunny, who posted a screenshot of a trade on Blackberry Calls from 2 days ago. This user only put $220 into the trade, which netted 36 contracts at an average cost of $6 per contract. The strike price of the calls was $8, which was 7% out of the money at the time, with 2 days till expiry. However, following a massive 34% 2-day rally through January 15th, they are now comfortably in the money and have appreciated by a factor of 57 times. The calls are now worth $3.20 each, for a net profit of 5,700%, or $11,000. It turns out that this $11,000 gain for Jedi Sunny will be put to good use. The OP's car was stolen about a month ago, and this is the way to pay for a car to replace it. When asked about what his next moves are, Jedi Sunny says that is not for sure yet, and right now the thing to do is enjoy the gains for the day. After cashing out the gains and locking in his massive success, Jedi Sunny plans to take the money and run. This just shows that when you're up big, sometimes it's best not to risk your success story and just appreciate the run while it lasts. Congratulations on your massive win. Before we get into the good stuff, make sure to click the link in the description below to get 4 free stocks with Webull if you haven't already. It's literally free money. Next up, we have user Fresh Tartar Sauce, who posted his portfolio going on a wild ride over the past year. In the beginning of 2020, he found out about Wallstreetbets and started YOLOing his money on FDs. This didn't work out well for him, as he seemed to get the market wrong with every trade. In March, at the height of the pandemic, he started buying puts as he thought the associated economic recession would hurt corporate profits and push stocks even lower. Unfortunately for him, money printing from the Federal Reserve put a floor on stock prices, and stocks started to rapidly rebound as many stocks actually benefited from the pandemic. In September, the OP finally gave up on being a rainbow bear and tried to ride momentum with calls on technology stocks. Unfortunately, the timing proved disastrous as he bought in right before technology stocks suffered a quick 12% correction. After this failed YOLO, his account reached an all-time low of $600, down almost $10,000 from the top. The extreme volatility of YOLOing on weekly FDs was a traumatic experience for this user, as he would often see his positions increase 100% just to gradually fall back down to zero. After these disastrous trading results, the OP decided he had to change his strategy if he wanted to make sustainable profits. He started doing some deep thinking about how he could reverse his losses, and he came up with a big brain solution. He had just lost $10,000 buying options based on the advice of Wallstreetbets degenerates. So to make back his money, he should just do the exact opposite of what Wallstreetbets users do. This line of thinking took him to the theta game. The strategy of the theta game is to sell options instead of buying them. In fact, the official description of r/theta gang is, quote, "We are selling options to Wallstreetbets degenerates." When you sell a covered call, you collect a small premium up front, and in return you don't participate in the upside once the stock goes above the strike price. This strategy is safer, albeit more boring than buying weekly options, as you will slowly make money collecting premiums over time, but you will never make a 10-bagger in a week. This strategy has worked well for the OP, and he has begun to gradually recoup his losses by selling options over the past few months. While he lost almost $10,000 following Wallstreetbets YOLO strategies, he doesn't blame the forum for his losses. He was a new trader learning from his mistakes. He considered the losses to be his tuition costs for learning how to trade. Additionally, he has a job paying him $80,000 a year, so this $10,000 loss isn't a huge setback. We wish you luck on your future trading. Next up, we have user Smokin' Millions, who found himself in the unfortunate position of backholding Lordstown Motors January 29th 35 strike calls, which have decreased in value more than 70% since he bought them. Based on its namesake city of Lordstown, Ohio, Lordstown Motors is an electric vehicle manufacturer that will produce the world's first commercial electric pickup truck, which it plans to release in 2021. It went public via a SPAC in July and initially surged 200% at the height of the EV craze. Since then, the stock has moved sideways in volatile trading. In the past few days, Lordstown stock has pulled back to $24 a share, meaning it would have to increase more than 40% within the next 2 weeks for his calls to expire in the money. This unfavorable price action has resulted in a 70% loss in his position. But despite all this, he has no intention of selling. He says it's okay if a stock you like goes down, because that just means it's on sale and you can buy more for a cheaper price. This sentiment is shared by billionaire Warren Buffett.
Anytime stocks go down, as far as I'm concerned, I like it because I'm a net buyer of stocks. I've been buying stocks ever since I was 11 years old. So when stocks go down, it's good news. Just like when hamburgers go down, it's good news, or Coca-Cola goes down, it's good news in terms of anything I buy. But stocks are going to go down. You can probably look it up as to what percent of the days of the since I was born they've gone down, and maybe it'd be 30% or something like that. And you can't predict what stocks will do, but in the short run. But you can predict that American business will do well over time. And
unfortunately, this wisdom only applies to stocks which have no expiry, meaning you can hold them forever until they eventually go up. The same cannot be said for options, which can expire worthless on expiry day. Alright guys, that wraps it up for this video. If you like the content, make sure to like, subscribe, and share. If you have any recent gains or losses, let us know in the comment section below. As always, thank you so much for watching. Wall Street Millennial, signing out.